Hello everyone and welcome back to another weekly analysis video. And in this video we're going to discuss about weekly analysis of gold and silver. So as we can see, almost 17% of meltdown in the chart of the gold and almost 30% of meltdown in the chart of the silver. So in the chart of the gold, it was from almost 5,598 market drop down to 4,674 area, which is almost $900 drops in the chart of the gold. So why? Because of a couple of major reasons. We can see from the market why the market was completely meltdown. So first reasons was the newly appointed federal chairman. Second was the interest rate, and third was the profit booking by the big players like institutional and hedge funds. Yes, so this was all the reasons for the complete meltdowns, and in this video I'm gonna explain all these reasons, all the interest rate from the last years, institutional buyings from last years, and all sorts of reasons, what we can expect from upcoming months or upcoming years as well. So don't miss the video and don't skip this video as well. So let's start our analysis video. So the new federal chairperson Kevin Voice has been appointed as a federal chairman, and he is known for a hawkish in the uh, dollar for the dollar. So basically, Kevin Warris is appointed as a new federal chairman, and so he is basically identified as a hawkish for the dollar market because he is also the chairman of the central bank. Uh, because of him, all the investors are started to reacting in the market, and that's why we see all this meltdown in the chart of the golds as well. So let's discuss about the gold from last years. From 2025 to 2026, it was the interest rate of the U.S. has been cut out, and the Federal Reserves was expanding its balance sheet. Basically, government was printing more and more money and investing that money to the government's bonds, which was resulting in the low in the economy, and economy there was more inflations in the country. Yes, so when the Federal Reserve is printing more and more money to buy the major assets like government's bonds, the governments in the long terms, that will create inflations in the country and uncertainty in the market as well. uh, that's why all the investors were panicking and taking out their money from the dollar assets and investing those money in the safe havens like gold ETF, silvers, or in a Japanese bonds. Basically, Japanese bond is also considered as a safe haven because its interest rate is always stayed below 0%. That's why all the investors from the worldwide will consider Japanese bonds, Japanese yields as a safe havens as well. So uh, because of all this uncertainty in the market, interest rate cuts during the year 2025, dollar was weakening for the whole years. So let me show you the chart and explain you. So let me show you the chart of the dollars. Yeah, so this is the chart of the dollar. As we can see, let me delete all this drawing. So this is basically after let me show you in the weekly time frame. Whole month, whole year. Yes, basically it's not only month, whole year dollar was in a sell, sell, sell. Whole year dollar was selling. Yes, because of the cut in interest rate, uncertainty in the market, fear of the investors, investor were panicking and moving their money out of the dollar market and investing it in a safe havens like gold and silvers, stuff like that. So this was the major reasons of the dollars to be weakening. Yes, now let's discuss two major reasons for the weakening of the gold for whole this year. First was, I already told you, interest rate cut. Second was buying of the bonds. So big players like Goldman Sachs are openly saying to focus on reduction of balance sheet. It means this will focus this is focused on inflation in the country as well. So if there will be the reduction in the balance sheet instead of adding more, mm, that will result how that will result in the cutting of more and more interest rate, uh, and they and instead what they did is they tried to hold the same interest rate for a certain period of time, which was almost 8 9 months. They imposed the same interest rate for almost that period of time. So now, after new federal chairman's market, we can see the strength in the dollars. It means dollar is being strong, gonna be the strong for a while. Why? Because I already told you Kevin Warris is a hawkish for the dollar market. So let me go back to the gold chart again, and let me drop back to the daily time frame. Uh, so after the new chairman's, investors started to panicking in the gold market and started to doing their take profit, and we can see the spikes, or we can see the strength in the government's bonds. So let me show you the 10-year government's bonds. Basically, let me open the chart. mm, 10 years government's bonds. So this is the chart of the government's bonds. As we can see, the spikes in the government's bonds as well. After the creation of higher high and higher low, market is giving us the spikes in these exact zones, which is also indicate the reduction of the balance sheet, reduction of the government's bonds uh, for the certain level of time. So bonds is basically giving the spikes towards upside. We can see higher high and higher low in the market. In the bonds, and it means the future bonds price will be less because of the reduction in the balance sheet. That's why DXY is showing some strength, which is also a result for the dollar to be stronger. So let me show you the chart of the dollar again. So let me show you this one. Okay, so let me delete all these lines. As we can see, because of the spikes in the government's bonds and reduction in the government's bonds, we can see the spikes in the dollar, spikes in the DXY. So which is indicating dollar is being stronger again. Yes, so that's what I want to show you. I just show you in the chart as well. So now basically it's indicating dollar will be in the little bit bullish term for a while. So we in the gold, let's go to the chart of the gold again. So what does it means is basically we just saw the profit taken in the chart of the gold. Yes, why? Why? Because of the strength of DXY, we saw the profit taking in the gold, and investors are expecting now to increase the interest rate. And if government gonna increase the interest rate, then the dollar will be more attractive for the investors. So that's why they are taking all these money out of the safe havens like gold and silvers and investing that money again back to the mm, government yields. Yes, now we just discussed about those three regions now. So now let's jump into the COT data of the gold. Yeah, as you can see in the screen, this is the COT data of the gold, and we can see the massive numbers of the long position has been closed by the institutional or the hedge funds, and only certain levels of the certain points, certain number of short has been closed by the governments, not by the government, sorry, by the institutional or the hedge funds. So this is indicating take profit has happened in these zones. Now after the take profit, what we can expect from the market? After the take profit, we're gonna expect the market to continue its meltdown and mm, give us take the support in stronger support area in a higher time frame. So as we can see, let's go in the longer time frame. So if you go in the longer time frame, yes, as you can see, all those banks were buying the gold from November, I think it was, let me see, 2026 August 25. Okay, they were all buying from last November 2025. Yes, November 2025. Yes, this was the exact zone where all the hedge funds and institutionals were taking the position, were taking the buy position for the longer period of time. And right now, here in January 20th, this was at exact top. They started to close their positions. So this is how we read the chart of the long position, how they close, when they close, and when they are entered in the market. Uh, so this is the chart of the long position done by the institutional. So basically now they almost close all the position, and market is standing in the below, little bit below, then almost in the same levels which was in the exact last year, November 21st, November 1st or 21st. Yes, so market has come down to exact same level. Institutional has closed all their buying positions, and now I think they're gonna accumulate their positions very soon after creating another lower low. Yes. Now, three things we saw here. I just explained you. First, it was the federal chairman's, which was hawkish for the hawkish and strong for the dollars. Second, institutional take profit. Institutional just take their profit here. I just show you. And third one is leverage meltdown, which is also called a margin call. Yes. What is leverage meltdown? Leverage meltdown. Let me explain it properly. So let's understand these topics. Yes, in last few days we saw the market is in a big rally. Yes, which was completely abnormal for us, because it does not matter for us, like it will go more higher or not. It's about speeds, how fast they were moving, and that was exactly signals, exact sign for the institutional take profit. Yes. Now, let me explain how the margin calls appears, or how the leverage meltdowns happen. So, those trades, as we can see, all these spikes has happens. When the spikes can be seen in the market, what does the retailers do? All the retailers started to jump and stack their positions, one, two, three hundreds of positions. Why? Because market was moving so fast. They will think market will go more higher and higher, so they are basically stacking their all the position here. Yes, so mm, but the main thing is they are over leveraging their accounts. They don't have that much amount of money in their account, but they are just taking the buy and buy uh, for the period of time. So that's gonna melt down their account. Why? Because if market gonna retrace even 100 points, then their account will be washed out, and they will be completely stay out from the market. Yes, the exact same things has happened. So all the retailers were doing the over leverage, all the traders were taking over leverage in the market, and market retraced 100 200 pips. All those retailers has been taken out, and because of that reasons, because when any traders who was buying from there and taking over leverage and holding that positions all the way to the top. So what basically it means now when these positions will be in the loss, and his account's going to be blown out, all his position from the bottoms will be also closed. So this gonna result in the market, uh, that market will started to fall down slowly, like a poisons, like they will come down, because all the position has been, all the traders has been taken out, all their account is been washed out. So this will trigger the market to come more further more down. So which was the exact scenario which we were seeing in last week on Thursday and Friday as well. So I just explained you three major regions. Yes, so keep in mind, because of the three major regions, one is federal, newly appointed federal chairman. Second is profit taken by the institutional, and third one is leverage meltdown and the margin call. So now, what we can expect from the market in upcoming days or in the week? So let's go from the weekly time frame. So as we can see, this is our break of structure zone. Yes, this is our exactly break of structure zone in the weekly time frame. And after the breakout, market uh, after the breakout, market take the small support here and continue its impulse towards upside. So still now we are uh, above this supports area. Then what we can expect from the market is to come back to this zone and tap the exact support zone. So this is our strong demand in weekly time frame. Yes, so let me draw the line again. Yes, so this is our weekly time frame support zone, strong demand zone, where we can expect market to fall back, create supports and continue its rise up. Yes, so let's be more accurate and let's jump into the lower time frame. Maybe we're gonna find out some more uh stronger levels. So we don't have anything in the daily. Let's see in the 4 hour time frame. Okay, yes, now I can divide my this area because it's very massive area. As you can see, this zone is starting from 4,277 to 4,540, which is almost $200-300 gaps. Yes, so now what we can do is we can see this exact demand zone in the lower time frame like 4 hours or in hourly, and shift your interest point of interest level. So now what will I do is this is my point of interest. If market can come back to this low, yes, come back to this low, this will be my stronger, this will be one of the stronger support for me. But if market does not have volume, enough volume to come back to that zone, then what I can expect from the market is simply, let me draw the zone because this zone is started from here is, so this will be my first support area, this will be my first support area, and I will observe the market in this exact zone. So let me go into the smaller time frame again. So let's see in the hourly time frame. Yes, this is the exactly zone in the hourly as well. So if market can able to come back to this zone and give us and any entry models, any uh, fulfill our any rules, then we're gonna take the entry level. So like this, if market break this low, they will eventually come back to test this support area and create our SBT model entries and give us the confirmation. Then we're gonna take our position from here all the way towards a new higher high. Or if market is failed to create a structure in this zone, simply what we can expect from the market is to continue its downfall towards another support area, which is started from 4,290 or 4,270 area, give us a spikes and continue its rise up like this. So when, and you need to be extremely careful while taking the entry in this zone, guys, because we can see the extra ultra high volume in the market. Yes, so this is the ultra high volume, this is the highest volume in the market, injected in the market in this whole period of time. So I will show you in the history as well, this is the highest volume. So this was the exactly zone when the market is break this structure and continue its fall below. After the breakout, give us the impulse and corrections, come back to the zone, break the structure and continue its fall down furthermore. So let me show you in the smaller time frame in the 15 minutes. So yes, this was the exact zone. uh, this was the breakup structure, market structure has been shipped. Yes, this was the zone for the sailings, and this was the breakup structures. After the breakup structure, market retest and come back down again, and this was another breakup structure where market come and retest and continue its lower low. That's how market is moving right now. So what we can expect in the market is, as soon as market gonna opens, if market come back to these zones and give us a retest, give us a sign or give us any entry modules, we're gonna stay in a sell position towards lower low. Or if market give us a breakout of this zone, so let me draw this line properly, breakout of this zone and give us closer above, breakout of this zone give us closer above, then we might expect the market to come back the retest and continuous impulse like this. So We never know, guys. So as usual, market is reactive, not predictive. We're just gonna follow the structure. We're not gonna jump in without getting any confirmation in the market. So that's what I'm looking for, the looking in the market. So as always, I'm always buyers in the market of the gold. So I'm expecting market to come back to my zone and tap this area. Then I will expect the market to start to continue rise up for a long terms, which is 6,000 and maybe higher than that, maybe 10,000 to 12,000 in upcoming 5 to 10 years. So yeah, that's it for now. And if you are interested and if you like my way of my analysis, then you can join my free telegram groups as well. I'll give you the link in the description box. And don't forget to like, subscribe and share the content, and see you guys in the live, and see you next week.